Ignore the day-to-day moves in gold. A healthy market is on its way, says our next guest. He's the co-portfolio manager of Tocqueville's $1.25 billion gold fund. Doug Groh, thank you so much for joining us in studio.
Thanks, Daniela. Good to be with you.
So, Doug, I know we last saw each other in May, and you were talking about a rally in gold way before the one just happened.
Sure.
And you say that more health for the market is on its way?
I think so. You know, we've gone through the summer downturn, which occurs, very early in the summer months. And it's been a really constructive gold market. If you look at all the different things that are going on, whether it's concern about fiscal policy here in the U.S. or monetary policy across the world, we have event-driven occurrences in North Korea, as well as, the hurricane, which has been a terrible disaster, which is going to have a significant impact on gasoline prices, probably timber prices, as people rebuild. Metal prices have been strong throughout the last month and a half or so. So we have a number of real strong currents as a positive direction for gold. And we've seen a good performance in August.
So we finally saw a breakthrough, the key psychological level of 1,300. Many investors were waiting for this. We've come back down a little bit from, hitting that 11-month high this week, but still, we're trading around 1311, 1315 here. How high could it go?
Right, a good point. That was an important element too, to break through that 1300 level. In particular, I think it was 1303 for the technical chartists who watch very closely those type of moves. We've gotten up to about 1325 or 27 or so in this last couple of days. We have to probably get to 1333, and I think we're well into that, ultimately into the September month. I think what you're going to see here is the conversation becomes more focused on the debt ceiling. Investors are going to look at their equity portfolio and say, hey, look, I've done pretty well in my equity investments. How can I make sure I'm finishing off the year in good form? I don't know what's going to go on in Washington. I'm going to take some money off the table and hedge my position. Gold is perfect for that. It's a great diversifier.
I think a lot of investors lose patience because they want to see that parabolic rise in gold like we saw when it did hit 1900.
Right.
And you're waiting for those days to happen again. So do you just ignore the dips we see here?
Well, we're long-term investors, and we're really looking for the long-term opportunity as opposed to the day-to-day swings. I mean, those are certainly important, and they certainly humble us, but they make us pay more attention. And it presents an opportunity. As we advance here beyond 1300, we'll probably pull back to 1300, but that gives us assurance that we're into the right direction.
Doug, are the cryptocurrencies stealing the metals thunder here, gold and silver?
It's an interesting development in the marketplace. They're very faddish. I think they're very interesting. I think for a number of investors who are also in the gold market, they're looking at the cryptocurrencies and saying, hey, should I participate in that? I mean, the reason they're maybe into gold is because they want an alternative currency. So cryptocurrencies are offering that. But the thing about cryptocurrencies is there's counterparty risk, or there's risk to the system that you're participating in, whereas gold around the world is recognized as a monetary instrument. And that's unique, and I think investors have to recognize that. There's a lot of volatility in cryptocurrencies, as there is in gold, and investors are probably playing that little dynamic. But I think the interesting thing is really gold has enduring value over the long term, where we don't know where cryptocurrencies are going to go.
Doug, before I let you go, let's look at your gold fund. Now, you are mostly in physical gold, but you're also in the mining companies, various ones. How do you see the state of the mining industry right now? Are you optimistic here?
Yeah, we are. The last few years have been tough for the mining sector, and the second quarter was really a pretty good quarter for them. They had good cash flow. They've cleaned up their balance sheet. They're a little bit more disciplined with regard to their capital allocation. Costs are under control. They're probably going to start to rise a little bit as we get into next year. But what's interesting about this sector is that it's really consolidated. So there's fewer names. I think, too, what's becoming a little bit more interesting is the drillers are becoming a little bit more visible for the marketplace. We've seen good drill results from Osisko Mining or ATAC or Premier Gold. And investors are starting to buy into that, where they were not paying attention to drilling a year ago or earlier this year. So I think that's a good construct for
Why do you think we're seeing
sector.
that change? Why do you think that's happening now?
Well, I think investors are getting a little bit more comfortable with the gold space, the gold mining space. There were the challenges in the past couple of years about the cost control, and investors were participating in the gold mining sector through the ETFs like GDX and GDXJ. but I think they've also recognized that, hey, you know, the true value opportunity is in the individual mining companies. And that's something we're trying to do, is find the value creation in the companies that either have great deposits or good operations where they can generate more cash flow.
Doug Groh of Tocqueville, thank you so much for joining us today.
Thanks, Danielle. Good to be with you.
And thanks for watching this edition of Kitco's Gold Report. We'll be back tomorrow.